Awesome. Well, let's go ahead and get started. I see that Wonjun has joined us. So we are at the top of the hour and we have a lot of great content to cover. So before we dive in, I did want to just cover a couple of housekeeping things. So first off, welcome folks to the Supermove Industry Roundtable. My name is Travis Wingate. I'm the Vice President of Marketing here at Supermove. And today, really excited, we're going to be discussing really the state of moving and storage across a couple of different topics that we believe are incredibly relevant right now in the industry. If you haven't already done so, you can go to supermove.com, download the report, the 2023 State of Moving and Storage report, completely free. Go over to supermove.com. The green bar at the top is where you will find the download link. So before I introduce our panelists or have them introduce themselves and dive into the questions, a couple of other housekeeping things. Q&A, there's a Q&A box you'll see in the Zoom window, so feel free to add your questions in there. We will do our absolute best to try to answer as many of those as possible or incorporate those into the conversation as much as possible. If not, we will be sending out this recording as well as a recap of this session early to mid next week. And so we always try to answer the questions then if we weren't able to answer the questions on the call. And then lastly, if you are ever interested in participating or joining us as a panelist, please feel free, or you have content ideas that you would be interested in learning more about, please feel free to reach out to me directly at travis@supermove.com. So enough of all that. I would like to now take a quick opportunity to introduce you all to our panelists for today's conversation. So we have Charles White, who's the president of IAM, Beau Roskow, who's the VP of Naglee Moving, and then Wonjun Jeong, who is our very own co-founder and CEO here at Supermove. So before we dive into the questions, I would ask that each of you just give us a quick intro of yourself, and then Wonjun will take it away. So why don't we start with you, Charles?
Okay, it's Charles, in quotes, Chuck White. Most people call me Chuck. I am the president of the International Association of Movers. At the end of this year, it'll be 5 years as the president and 19 years with the International Association of Movers. And I'm kind of the lame duck here. About a week and a half ago or so, I announced formally that I'll be retiring at the end of the year. So you can't kick me around too much anymore. If you're going to kick me, you better do it quickly. But really excited to be here today with Supermove. Supermove's become just an amazing partner with IAM. We really love having them sponsoring and exhibiting and participating in all of the things that IAM does. And hopefully we're going to continue to grow this relationship. So,
absolutely. Awesome. And congrats again. Super exciting. Thanks. Beau.
Yes, pleasure to be here. Beau Roskow, Vice President and owner of Naglee Moving and Storage. So about 8 years in the industry now, feels like dog years, how fast it's gone by, and 20 plus years in regional management with a retail organization, small one, Walmart and Sam's Club. I'm sure some of you've heard of it. Been a pleasure to be here. Been with Supermove for going on 2 years now, and I echo great partnership and really think this is the way of the future. So thank you for having me.
Thanks for joining us. And then last but certainly not least, Wonjun, and then you can take us away.
Awesome. Hey, everybody. Thanks everyone for coming to the roundtable today. Super excited for this conversation that we're about to have. I'm Wonjun. I'm one of the co-founders, CEO of Supermove. We started this company about 4 years ago now, and our goal is just make moving as simple and easy as possible for moving companies through technology. I used to work at Facebook and Pinterest as a software engineer, and then decided to start this company with my co-founder Mark, who leads the product side of the business. So for Supermove, what we did in the past few months, we actually ran a survey across as many moving companies that we could potentially reach out to. And the survey goal was twofold. One was to figure out, like the data about the moving industry. It's very hard to find data about the moving industry online, and with our connections and the different kinds of companies we've met, the companies we work with, we surveyed over couple hundred moving companies to fill out this survey. And second, we were just really curious, what's going on right now. The economy, the macro environment is very challenging, not just for the moving industry as a whole, but the whole world as a whole. And it's really important for us, everyone that's involved in this industry, to know what's going on and how others are creatively adjusting to these headwinds that everyone is facing in the current macro, to figure out the best ways to run business. So for me, yes, I'm in the moving industry. We build technology, but the tech industry as a whole has taken a big downswing, and for us, before in venture capital and startups, the goal is to just grow and growth at all costs. But now it has completely shifted to becoming as profitable and capital efficient as possible. And it's completely changed the dynamic of how we should run startups and tech in general. But enough about tech. Today's about moving. And when I walk into the grocery store now and I want to buy eggs, very hard. You can see it's like $2 an egg at some grocery stores, and you wait in line at Costco in the morning to buy eggs. So obviously there's things going on in this world where inflation, recession is happening, and it's impacting our daily lives. So I want to ask Chuck and Beau, maybe we can start with Chuck. Do you guys think we're heading into a recession today, or do you think inflation is the bigger issue? How do you kind of think about the world as a whole?
Yeah, I try to follow the economics. I try to follow the market pretty closely, and its effect on transportation in general and our industry specifically. And I can read one so-called expert one day, and it's recession happening tomorrow, and another one talking about growth and that the numbers are leading in a very different direction. The one thing, so are we in a recession, or are we heading for a recession? I'm going to hedge my bet and say I'm not sure. What I do know is the inflationary times that we are in are something we haven't seen almost my entire time. I came into the moving industry in the mid 90s or early 90s, and I don't know that we've seen inflation like this since then. We've been through a downturn, recession a couple of times, but this inflation is affecting every aspect of our industry. All of the products that we have to buy to be able to meet the needs, trucks, packing material, wood products, on and on and on. That's the slope of the line, and it seems to be almost never ending. You talked about eggs, I think about boxes, and it's just crazy right now. And so for me, I think the moving market is flat to somewhat robust. As we went through the pandemic, I will tell you, I remember exactly where I was when I thought, the just hit the fan. It was March 13th, 2020. I was coming back for a conference in South America. US had just started closing its borders to travel. And I walked into Dulles Airport after that conference, and there was literally no one there other than the people that were on my flight. And I thought, holy cow, what's happened in the last week? And so I thought at that time, the moving industry was really in deep at that point, because I just thought we were going to be at a standstill, people in general, and obviously our industry. And I couldn't have been more wrong, because then the concept of remote work came around, and man, people started being able to move away from city centers, away from the high cost areas, and going other places. And I tell you, the last year and a half of the pandemic was a boon for our industry. I think most people have seen that. But these inflationary times are dramatic, and they're going to have, I think, a very profound effect on obviously our costs, but then the pricing associated with moving as well. So, but I'll shut up and let Beau chime in here.
No, that's
Yeah,
great.
no, well said. I mean, Wonjun, I think from my lens, from where it is, there's really some peaks and valleys, and only being 8 years into the industry, when there was a lot of headline news about the recession and inflation in this, I took it upon myself to go back and say, okay, when was the last time this industry saw something like this? And really, it was back in that 2008 timeframe with the war and some of the other things. And I'm a data guy, I'm a trend guy, and trying to figure out how things go, tried to predict, kind of saying, okay, what did that run rate look like so we could anticipate some of those peaks and valleys? But this is different. I think there's anomalies from the COVID aspect. There's some other pieces that came in, but where I tried to boil it down was, even in 2008, you had people that were still moving in to new areas because they had to chase where that remaining work was. You had people moving out because of the downsizing of some of the major industries that were in those areas that were now going to new locations. And then you had the other aspect of people moving up because they downsized certain companies. So now they were moving to other locations or moving down. So it seems like historically, this industry has still done well in both the peaks and the valleys.
Yep.
It's really that stable line that happens when everything stays normal for a while. That's where you kind of get off. So I still believe we are kind of running a tailwind coming out of COVID from an aspect, but it just doesn't look the same it used to. So you really have to be able to pivot and identify where those clusters are to maximize. But if you stay in that one lane, you could really hit a hard stop pretty quick. And to drill down a little deeper inside that too, the inflation that's where it's going to catch you in your cost. Because now historically we've chased a lot of revenue, but you've got to really pay attention to margins. And it wasn't like we had great margins to begin with, but with the inflation aspects and some of the others, you got to really be dialed into what's this going to look like, not just now, but 6 months, 12 months, and 18 months there, downstream. So that's kind of how we're seeing it. We're not hitting a panic button, but we're not falling asleep either.
Yeah. Go ahead, Chuck.
Well, I was just going to touch on that, on Beau's last point. Understanding your cost is critical at this point, and understanding what effect that's going to have on your pricing. I understand we are in unbelievably competitive markets, but we've got to, as an industry, be able to price our work accordingly. If we don't, we can't look back to last year or the year before and say X percentage discount or however we're whatever hourly rate, however you're pricing your jobs. It's not the same. And I understand that, you've got a competitor down the road that you've got to worry about. But you can't give this work away, not if you hope to be in business when we get to the end of 23, 24, 25. You've got to be able to take into consideration what your costs are. And as I go around the country and speak to different groups, I've gotten to speak to a number of U.S. state associations and speak at their annual conferences. And the one thing that scares me a bit is I'm not so sure people fully understand what their costs actually are, and then how to account for that in their pricing. What does it take for an individual, a company, to put 2-3 guys in a truck and drive off the lot? I'm not so sure we are the best at that. And I think we really need to become a little more financially literate as we move to the future. We've got some amazing people that are innovative, that know every aspect of moving. But I think one of the weak spots that I see as I travel around is financial literacy and really understanding their costs and their margins, and then what it means to be actually profitable.
Yeah, absolutely, absolutely. If you look at just interest rates in general, like to buy a home and taking a loan to buy a home, you'll see that it's much more expensive to acquire a new housing loan right now it is than even 2 years ago. But like Beau said, even though the cost of owning a house or buying a house is more expensive, people will still downsize in order to do so. Then the moving volume still stays the same, but maybe the consumer appetite of paying for an expensive move might be lower than before. Which means that, like you said, Chuck, understanding your costs is so critical so that you can preserve your margins, so that you can price accordingly. When you talk about costs, it's a really good question. It's something that we talk to a lot of moving companies about, help them with. How do you know if you're a moving company owner or an accountant or CFO? How do you know if you understand your costs or don't? Well, what's a good barometer check in your mind?
Well, in my mind, you're just going to have to do your homework and continually monitor. I think we get so narrowly focused on the operations side. Many of our owners that I see, particularly for small, medium-sized companies, have been involved as drivers in the industry or have been, operations managers in the industry, and they think, I can do this. I can do this by myself. And so they're watching from the operational perspective, but they've got to have somebody, either they themselves or somebody within their organization, that can look at what are the prices of material, what's the price of fuel, what does it take, and the big thing now is personnel. What are we paying our personnel? And so you got to do some cost management and pricing within your hierarchy, and talking to the salespeople, the Supermove type folks, but your packaging salespeople, and on, to understand what the trends are, where the markets are going, where the pricing is going, and carefully monitor that to be able to see then if I am appropriately pricing the work that I'm doing. I know Beau is significantly into that, particularly from the industry that he came from. I'd be interested to see what he has to say about cost monitoring.
Yeah, no, thanks, Chuck. So Andre, it's a great question. I guess I would start simple from an aspect first. It's what are you solving for, right? So right off the bat, there's a framework outside of that, because the richness and legacy of this industry has been, even looking at your data of how many trucks, how many people, how many generations you've come up. So there's an inherent path that you operationally have to constantly learn how to work in your business, because you started so small and wore so many hats. But there becomes a certain break points as your thresholds start going, that trend has to change to how you work on your business. And if you haven't been exposed or aligned or get folks with that blind spot, it's just natural human aspects to stay in what you always did, but you find yourself working more in your business and you never evolve the on your business aspect. So I think financial acumen is a great call out that Chuck hit earlier, because that gives you the landscape of where all your strengths and weaknesses and blind spots are, then building those goals to those particular spots, then building, okay, now you know what you're solving for. How do you monitor that? And, where I have seen in my 8 years, just my lens from where it's at, this business tends to be very reactionary. You're always reacting and reacting and reacting, almost to the point that you name the entire year. You either have peak season or non-peak. So said another way, you're either crazy or not crazy. So we're either going to operate in the crazy time frame, or we're going to catch our breath and hope we did well. And how do we now evolve that further? How do we maybe not break down an entire year into 2 segments and start looking at per quarter? So, you know, where I came from, those type of goals, planning was key. And that's probably where I would land the most on this, is especially for the owners and some of the operators that are on the call there. How much time do you really spend planning your business versus working in your business? And is there a plan for every segment of your business? And it's okay if there's not, but start by asking those questions of yourself and then asking those questions of the team that way. And I think it will start to evolve as you go. This is a fun industry, and I see why people stay in it. But I can also tell you why my hairline from retail got like this. It would be the same way in moving, because we do repeat a lot of the same craziness year in and year out, that I think there's a better way as we start having more of these roundtable meetings and start sharing and talking through this, and basically bring up the whole bottom of the industry to then establish what our new capacity and peaks look like.
Yeah, I really like what you've said. And you know, peak, non-peak, that when I first got into the business, you know, that's what everybody, oh, it's the crazy time now, it's the peak, and then we catch our breath. Well, what I realized pretty early on, when we're catching our breath, it's because our trucks are sitting there on the lot, and we're either downsizing staff or staff is sweeping out the warehouse, and we're not generating revenue. And so one of the things I've been talking about, and one of the things Beau and I talked about earlier, was diversification. I mean, too many of our movers know moving, man. They know it backwards and forwards. They know every aspect of it, but they are, I think, a bit complacent because they think it's okay. It's the norm to have that peak and that non-peak, and it's okay to just have trucks sitting empty. I say no. And it's, you know, around the world, I'm with the International Association of Movers. We've got movers in 170 countries in the world, kind of a mini UN, if you will. But moving, and household moving in particular, is typically one aspect of what these entities do outside the US. They are very diversified. They have a warehouse, they've got trucks, they've got personnel, and they find all kinds of ways to utilize that so as not to have as many of these peaks and really deep valleys that we sometimes experience in the US. And then getting back real quickly to the financial literacy, a couple of things. One of the things I learned, Beau, early on from the organization that I began in this industry in the 90s, we did a lot of comparison year over year. You know, what was the revenue? What are our margins in June of this year versus June of the next year, and then June the following year? Let's look at the trends and being able to follow those trends year over year to be able to really get a picture, because we always think either we're busy or not busy. Well, are we truly? And what is, you know, it's just not a feel. We've got to start looking at the numbers, and you need to become financially literate. So I'm going to throw a plug in for the International Association of Movers. We have a financial literacy program in our learning portal, and it's written and provided by people that have been in the industry. So financial experts, CPAs types, but come from a background of moving. So much of what is available to you to learn, you can find there about all aspects of the financial side of moving. And I'd encourage people to take a look at that and take some time. It's, you know, not something that you're going to do overnight. but you can really get a feel for what are the norms, what makes sense financially in the moving world, just rather than in general in any other business.
Yeah, that makes a lot of sense. I love what Beau said about monitoring and planning. We talk to a variety of customers and prospects every day, and it's such a wide spectrum of financial literacy within the industry. You'll have, some owners that just sort of look at the bank statements at the end of each year. It's like, okay, yeah, that was a good year. Okay, that was a not so good year. And then that's sort of the extent of where we go. And then you have the other extreme, where they actually know, all of their fixed costs, how much they're spending every week, every month on payroll, on trucks, on things that are just cost like rent, and then how much each move and segment costs per move, right? Like a long distance move versus a local move versus a commercial move, how much the additive work of doing that work actually costs, so that they can price and be competitive in those segments accordingly. And then they just plan in real time, almost like they have live feeds of how they're doing every single week, and can seriously make improvements and adjustments every single week. So absolutely, I agree. Like that planning and strategic aspect of controlling your costs is key. So there's always two sides to a business. There's, and when you plan, you can think about, once you have the data in front of you of how much you're making and how much you're spending, you can decide, do I want to cut costs or do I want to increase my revenues? Obviously, during a time like this with the macro, we can also talk about increasing. And Chuck, you mentioned diversification into other areas, as in the winter time. Trucks are fixed costs, right? You're paying insurance for these trucks. You're paying lot storage, even like parking lot space for these trucks. So what are different ways that you've seen moving companies specifically diversify, is even if they're like doing less moves or cheaper moves throughout this time? Maybe Beau, if you want to start with this one.
Yeah, it varies from area to area. You got to find out and understand what the sweet spot in your own area is. And one of the things that I've seen since the pandemic started, an explosion of Amazon and online buying and Wayfair or whatever it may be, those kinds of companies, that final mile aspect is really increasing. They need someone to warehouse items that are purchased online and then delivered into the home. And it's types of items that movers deal with every day. It's not the small parcel, it's not the FedEx small package kind of thing. We're talking about refrigerators, we're talking about couches, we're talking about beds that people are buying online. And yeah, that's great. You can buy it online and it gets into your area from a large distribution center, but at some point it's got to get into the home. And so one of the things that I see a lot of movers getting into and utilizing their warehouse space for is that final mile, that final delivery piece. And I think Beau will maybe touch on this. I mean, it's not something that you say today, okay, in December, because I'm not busy on the household goods side, I'll focus on that. And then when springtime comes, oh, well, I'll just turn a blind eye to that. And I'll get back into moving. If you want to get into these things, you're going to have to find those sweet spots, those balances, and the levers will turn up and down a bit, but you can't start one, turn it off, turn on another one. You've got to find that nice balance within your business. But the final mile type thing is one aspect that people can start to look at and see if it fits what they are doing. But there are many other office moving, many other aspects that you can look at and delve into to find out what makes sense in your area, what makes sense with the trucks that you have and the personnel that you have. But we can't just put blinders on and say we're household good movers and that's all we do. Beau, thoughts?
Yeah, no, so kind of two-part question I see on this. So the first part I would say, as you're talking about diversification and what that looks like. So again, what I led off is, what are you solving for, right? So the world that I came from, in the retail world, we used to say every item had a Christmas, meaning that throughout an entire calendar year, there were certain times of the year that that particular item would sell fivefold. And then there were other times of the year that you just had to have it on the shelves for the consumer to still know you do it and have it, but you didn't take up an entire area of it. Candy corn during October, apple cider during where it's at. We could go on and on. Well, flip that script, flip that lens a little bit, and look at your own segmentation inside your moving world. And look at now you're solving for capacity, no different than what retail was solving for. What is the capacity that you have during the certain times? Now, we all know during peak season, from where it's at, your capacity is bonkers. It's all. So what are you really solving for? You're just solving for keeping your sanity and keeping your quality right during that standpoint and knowing where to ramp up. But where is that focus in those other quarters to adjust that lever and pivot to be able to maybe not maximize capacity, but make sure that you don't start out in the ditch when you get into the peak seasons? When you want to start a new segmentation, that you know where to invest without putting yourself in debt on it and know how much to spend or not spend. So we come back, and as we've looked at this world, it's really been about capacity, because you can't over capacity where you then shut off those valves that any traction you've had, you've now lost whatever focus you've had. But on the flip side of that, if you over capacitize yourself, you risk your brand and you risk your quality. So I think when you think of growth, that planning piece comes back of what's that organic growth. But really, Wonjun and Travis and Charles, it starts around understanding your capacity, which then obviously ties right into, again, back to that financial acumen. So all these things kind of mirror and start to connect to each other that way, but really looking at that big picture and then adding new service lines that will be able to keep you busy and generate. And hey, maybe first quarter is not about making money. It's just about not losing money. Yeah. And everybody's going to have a different lens at a different time based off of your company, of what you're solving for. But you got to step back first with it. But for us, it's really been that focus on what service lines can we maximize capacity while also having organic growth that we can have sustainability with.
Great point. You know, real quick, Wonjun, Beau, you and I, when we were prepping for this talk, and I found it very interesting that you have these different lines of business that you operate in, but you don't overwhelm yourself in one for fear of, you know, losing out on the ability to move back into one of the other ones. You know, and the example that I think you talked about was the middle of peak season, our traditional peak season for household goods. I mean, you could put 100% of your capacity into that if you wanted to, but is that the right thing to do? You have these other lines of business you don't want to turn your back on, and you have this one line of business that if you overcommit, then the quality may drop. And so your reputation management is then problematic. So I really love the concept that you talked about, the balance within your organization and not overcommitting too much to one line versus the other, or not totally abandoning at least one line of business.
Thank you. Yes. And I don't know if you'll ever find balance. We like to use the word harmony. Okay. Because, you know, it just, how do you take at times what the market is giving you when your plan does not work? Because plans sometimes don't work either, but having the flexibility to have that harmony, to not just solve for the year, but have a trend of what 1, 3, and 5 look like as you continue to evolve.
Gotcha. Yeah.
Yeah. As you think about diversification, talent also plays a pretty big part of it. There's also a question from the audience, to kind of touch on Beau's point when you mentioned financial literacy. How far down into your organization do you try to push financial literacy to make it easier for the company? Does everyone need to know the numbers? Is it just the owner? How do you instill that culture of where financial literacy is important within the business?
So
Yep.
go ahead.
All yours, Chuck.
All right. Well, I think about my association and the number of personnel that I have there, much smaller than when I was in the moving industry. But I think I learned from a gentleman who I think was, a real role model for me. He wasn't trying to hide anything within the organization. The more that the staff, and that is from the guy humping that furniture up and down the stairs to at the vice president level, I think it's incredibly important to see, at least that superficially, I'll get it out, the numbers, and understanding what those numbers mean to the organization, and then to them as individuals. The more they understand the numbers throughout the organization and how they can have an effect on those numbers, then I think there's greater buy-in, there's greater understanding. And if you have that transparency up and down the organization, I think it can only help you. I mean, you don't say, hey, this guy makes this much money and this guy makes that much money. We're not talking at that level. But at the macro level, as you've talked about, Wonjun, I do believe everyone in the organization needs to have that transparency so they understand what role they play and how they can affect those numbers positively or negatively, depending on their actions. I don't, Beau, do you handle it that way within your organization?
Absolutely, Chuck. So you're gonna get me excited on this. This is such stuff
Okay.
fired up on there. But I think that word transparency is absolutely key. It starts with transparency. Transparency is another word for saying organizational trust. If your folks don't know if you're winning or losing, how do you expect more or expect less at certain times? And everybody has a scoreboard. Now that scoreboard may look different as you go through the different levels, but I would be, professionally inclined to have a good debate with anybody that there is a number on every path inside an organization that is used to measure success or non-success. Mm-hmm. It's how do you align those numbers in a harmony way that was relevant all the way to the top. So we can see what a good financial month looks like, but I can go right out and say, you know what? It's because you had 5-star reviews and this crew was there. And Jimmy, thank you. It's because of how you pack and made that customer feel. So once we can align all those levels and we bring relevance to everybody inside your organization, that what they do matters and they matter, and they can tell you why they matter because of what they do and not just the activities, you're going to win. You're going to win and win and win. But if you don't know your own numbers to be able to create that path of success, you're going to struggle in activity, and activity doesn't always equal results.
Yeah, it's almost, you can imagine like levers within the business, sort of every single person within a business in the moving business is sort of driving some sort of metric forward. And as a company at the end of the year, if you see that, oh, we're off, the goal that we set, you can actually drill down to see where we weren't successful and then diagnose and adjust those in real time, even like throughout the year. And that's how you end up winning. Even the crews too, right? Everyone can understand what they're being measured against and how they succeed and how they win. So sure. Absolutely. I think some folks might think, if I was in the audience sort of listening, it might be tough. You might not feel like you have the right talent tool to create this sort of culture of financial literacy or transparency within the business. How do you deal with that?
Well, I mean, if to me, the larger topic, maybe beyond that, is where the hell do I find these people? We are in such a different environment, about 3.5% unemployment at this point. There's a lot of transitioning and movement, as you've already talked about a bit, Wonjun, but it is incredibly difficult on the personnel level right now. In the mobility sector in general, the word talent is being used, as you said. But I think it, I don't know that talent necessarily is what a lot of movers think about. It's finding that baseline personnel, but that's in fact talent. And we're in a difficult that this goes back to that inflationary factor. I went into McDonald's in the Washington, D.C. area the other day, and they were advertising for employees starting at $17 an hour. Again, it hasn't been that long that we were starting to bring people into organizations at moving companies just above minimum wage. Well, wait a minute, you're not going to attract anybody if the McDonald's are at $17 an hour in the Washington, D.C. area. So there's that inflationary factor, number one. And then, can you find people to work at the boots on the ground level, those walking into the home? I don't know many young people. They're great on their iPads, they're great on their phone, but who want to haul that furniture up 3 flights of stairs on the 3rd floor apartment. So that's incredibly difficult there. But then in your inside teams as well, talent personnel is difficult to find. So I don't have any magic bullet other than what Beau talked a little bit about previously, and you talked about as well, Wonjun, is having people be valued, having people understand within your organization they make a difference, having people understand that there isn't a track of upward mobility for them within your organizations. I mean, one of the biggest things that we face in our industry is drivers and driver shortages. Well, the best way that I found when I was in the industry to find drivers was to grow them internally. Somebody came in as a packer, or somebody came in as a loader, and then help them to be able to get qualified to drive some of your pack trucks, and then get them qualified with a Class B CDL, and then offer them the opportunity to learn and get a Class A CDL. I mean, this is a difficult issue, personnel talent across the entire moving industry, top to bottom. But I think if you value people and make them feel valued, then you keep them, and you can then hopefully grow them within your organization. But this is a bit of a new phenomenon. It used to be just, shuffle them in, shuffle them out kind of thing. They were coming and going. Finding talent now is rough. Beau, have you solved that problem?
I would. If I wouldn't be on the phone if I solved that problem. But I'll tell you though, I mean, we started with financial. So I guess I'd put it this way: talent is a word that's very passionate to me as well, from the world that I came from. But it's almost like the new sexy word.
Yeah.
What does that mean? What does talent mean? And I'm sure we all have an optics of what that is. So to come back a little bit, just like financial acumen, well, what's that mean? Well, let's break it down in this world. So financial acumen, you have revenue, you have cost, you have the margin aspect. So you would say you have controllable costs, and then you have flexible costs. And at the end of the day, you try to measure it off your profitability of, did I do good or did I do bad? Okay. And we've identified that this industry has maybe leaned more into revenue chasing and then hoping that at the end of the world or the end of the year, we did well. So there's growth and blind spots to how to segmentation that out. Well, switch your lens now and put on your talent hats. It's the same aspect. I guarantee you 9 out of 10 people on the call, if I said, hey, what's talent mean? The first word out of their mouth is acquisition. Well, that's a part of talent, of attracting new pieces, but it's probably your most expensive. So step back and look within your own organization first and put those 4 buckets in. So really, how many people do you have working for you already right now? And why you're still open is because of those people. So how much time is put into development? What's that next level look like for where they're at and where they want to be? But a little side note, do we all know them by name? It sounds so simple, but the most respectful piece there is, does all your leadership within your building know everybody in your building by name? Because if they don't, you could be missing a basic element just in development. Because if you don't have the respect to know who they are, why are they going to trust you're there to help them? So think about development and what that world looks like. Then go through from there is after you get out of development, look at retention. We know drivers overall, e-commerce is exploding. Amazon's here, Target's here, you name it. Driving is now something other people can do. So how do you retain the most important asset you have? Because unless you're just going to be a booking or a coordinating company, without your drivers, you're in deep trouble along those lines. So where is that retention plan and development plan married together to make sure that you can sustain yourself back to those financial segments? And then that third piece, in my opinion, that's where acquisition lies. So if you've really planned your business out and you see what your flight paths are, and you're building your core group to be prepared for what that future looks like and how you start to pivot and navigate there, now you start using acquisition, as the NFL would say, with free agents. Start filling in those gaps to what you need or through the draft, AKA rookies, because if you got a healthy learning environment, they will accelerate faster with everybody being in alignment that way, versus just constantly turning and burning as people go through. That then tax all of your veteran people, it taxes your office personnel, it taxes everybody, because you just have to slow down to move fast again. And that's all acquisition does. And then just like your P&L at the end of the year, if you really want to measure, is your talent plan working? Look at your succession planning. If you can't look at your organizational chart and say, I have the potential, not the right now, I have the potential to fill 2 levels up at any point by looking at my chart with everybody I have, there's your profit and talent right there. But if you look at your work chart and you don't have a succession plan, you're just hoping for success. You're not planning for it.
You got me so excited with all the football analogies. I'm ready to go out and start playing again.
That was for you, Chuck.
Yeah.
Thank you. Well, you know what I heard there so much, I think, was, so acquisition, I believe, is incredibly difficult. Acquisition of that talent. It's so much better to retain it. And so valuing the people that you have within your organization, that goes back to, knowing their name, being transparent, and having them believe that the role that they play is important to that bottom line. All of that plays in to, now I don't have to get so many of those free agents coming in because I've retained the talent that I've gotten. And when when acquisition does come into play, those people are putting their arm around those new hires and they're saying, okay, let's teach you our way to get this done and maybe help you mature through the organization. So I loved everything you were saying. It took me back to my coaching high school days.
Yeah. I love what you said, Beau. I think you're very systems driven thinker. You're sort of like systemizing the business and thinking about how to place people and build them up to be better in their roles. And I don't know if for a lot of the listeners on the call here, maybe while we're interviewing people, we tend to look for people with tons of experience in the moving industry. Like, how long have you been a mover for? How long have you been a driver for? How long have you sold moves? What have you done? And then I think what Beau is suggesting is, in this time where talent is really hard to acquire, other ways to tackle that would be creating a developmental plan where you can have people with no or very little experience come into your business. And because you've set up a path for success for them, it's almost like more people can succeed in that role, and thus your acquisition becomes easier. The talent you can find and fill in that role becomes easier, thus creating like a competitive advantage. I think that's super interesting. But is that what sort of you're noticing in the industry? Like, folks who do that tend to have larger advantages in acquiring the right people for the role versus others?
And not just in this industry, I saw this across all boards of image. When we talk about talent's not just being solved in the moving industry, talent's being solved across every industry. Mm-hmm. And the lens and sometimes acquisition is the quick fix, or we think it's the quick fix. And it's really a lack of a good development talent plan. So yeah, I mean, spot on that way. But you have to be patient. You don't do this overnight. And this is back to that capacity aspect that comes in. Development takes time, but you put those measurements in place to make sure you're making progress in there. And as the whole team moves, it's a lot harder to move backwards fast. It's not Candyland at that point, or Chutes and Ladders. Your organizational strength can be grown as you move incrementally that way. Then you fill in acquisition to make some of your big jumps that way. I'm sure lots of debates. It's the art and science of finance and talent, but it's fun. It's fun, but it really goes back to the basics. And I say the basics. Do you know everybody by name? 1. Does everybody understand their relevance? 2. And I say relevance, they make a difference. We can't tell them they make a difference. They have to believe they make a difference. And how they know they make a difference is by how you measure them, but most importantly, how they measure themselves. And then that's where they plug into the organization.
And understanding the full mission and vision for the organization. I mean, okay, we want to move people, but it's a bit more to that. And each organization has their own flavor and their own culture and their own specific ideas about what their mission and visions are for that organization. And you've got to be able to share that. You've got to be able to ingrain that into the personnel. And again, then acquisition becomes that much more. It's the development, I think, that becomes the key in the growth within the organization. And as you said, then the acquisition becomes a much smaller piece, because acquisition is tough.
Yeah, it really is. In every single industry. So from a tech perspective, it's incredibly difficult to find engineers to join a company like Supermove. Like the most talented ones are typically working at very cushy, like the Google and Facebooks of the world. And like Beau said, you have to find like the high potential, high drive, like diamonds in the rough that like Google and Facebook might not give a chance towards, but you build the development plan and set up the environment for success. And that's how the best companies are built in tech. And I imagine similar things could be for moving. If you can ask the right questions to identify like drive and hunger and potential, even if it's not about moving, you can take those raw abilities and apply it to problems in your business and make a great hire that way. Cool. We have about 7 minutes left. Want to touch a little bit about paid marketing efforts within the business. Especially given the current environment, how do you think about paid marketing? How do you find quality leads to be driven to your business? Is paid marketing even the best channel? What do you guys think?
Well, Beau's into it right now as a person who's marketing a moving entity. I think he probably can speak to this first.
Sure. Yeah. So again, back to your segmentation, Wonjun, I use marketing as an aspect. And I think, again, it's another word that has created a little bit of confusion with this emergence of social media and some of the other pieces. Traditional marketing is usually targeted for a particular piece to drive a service or drive that particular product or line. A lot of people then go into awareness campaigns of just how do you get your name out from a brand, a differentiator, a different piece that way. So we have tried to use both in a particular balance that way. Some of the things we have seen because of the traditional peak season, we don't have to market because all you're doing is over marketing your capacity at that point. We know there's fish in the pond during that time frame. Where do you use marketing for the quarters that the fish are not there? Where do you then transition to those segmentation to get that word out as an accelerator or as a target or as a focus? So we use it very strategically for a particular time frame, and then we go in and out while also always trying to keep an awareness campaign going that just continues to educate our folks. And meaning our folks as in internal and our customers. Then as they get to know our name or they get to know the local area or the regional area or the national area, then they start drilling down. We are dealing with a much smarter consumer than we have ever seen in years. They are at the fingertips of just about everything. And their lens has changed that referrals matter tremendously. If Miss Jones, your neighbor, used them, well, I know Miss Jones because everybody can tell the same story on social media today. So now who's going to win in this space to be able to bring real references with great content, but also easy focused solutions to that smart consumer who wants an answer and wants the information in seconds. So this is where we go in and we use marketing to kind of fill those voids in these particular areas that we need. Meaning Naglee, we can't be everything to everybody. So we have to keep slowing down and making sure we're the right solution for the person we're trying to reach.
Yeah, I think marketing depends on, what is your, as you, I think, very eloquently put, what's your target audience here, and then figure out, what are your business lines, and then find a way to be able to reach them. I think a lot of the businesses that I speak to that are involved with state associations are either local movers or intra-state movers, and they're not, they may be van line agents, and that takes them into another segment. But are they involved in their local chambers of commerce? Are they watching the ads, and the reviews on Angie's List and Yelp and that kind of stuff? But do they have a young person maybe in their organization who has a little savvy on all of the different social media outlets and can help get their names out there? So it just really kind of depends on what markets you're involved in, and a lot of it's not necessarily investing money per se, but there is time and effort associated with reputation management, and you just have to be diligent. Sure, you can throw all kinds of money at marketing, but many don't have the wherewithal, don't have the marketing dollars to be able to do that. But you can't turn a blind eye to it. So I think that there are many ways to market your organization, get name recognition, get your identity out there without having to spend a lot of money. But you have to invest some time, and you can't turn a blind eye to it and just in this day and age think, if I build it, they will come. That's just not necessarily going to happen.
Yeah.
And one last
Absolutely.
piece there that Wonjun and I put, your data was really good in this space. And I really appreciate what you guys put into your report, because marketing can also be intimidating. I didn't know marketing till a certain part in my career, till I actually had, you know, a Travis in my life to say, come here, let me show you along those lines. So if you don't know, that's okay. But look at the data. Look at the report of 100 moving companies there. And even if you start small, just start in that segment. Marketing does not have to be this tidal wave of everything. Look at the referral piece, or look at and try it. Try it for a small segment, pick a date, pick 10, and then track it. Did it work? Did it not work? And go from there.
I mean, we're so tied to home buying and home selling. And we started out talking about interest rates creeping up and home values creeping up and how difficult, and that's a little scary piece associated with inflation. I worry a little bit about the future in that the more homes that are buying and being sold, the greater chance that those people will be looking for a mover to help them in their relocation process. And that's becoming tight for a lot of people at this point. But one entity or group of entities in your area that you can reach out to and talk to and get involved with are the realtors in your area. They have the touch, the feel of the movement of the housing market. They know who is moving. And if you can join with them, support the realtors in your area, they'll help support you. So there's all kinds of ways to get your name out there that cost next to nothing, but can do amazing work to have people come to know who you are and the quality of work that you do.
So yeah, I think we're pretty much at time now. Do you guys have any final closing thoughts? Running a moving company is complex, and the world right now doesn't make it any easier.
Mm-hmm.
What do you think? What would be your last parting words or thoughts be to the listeners today?
Well, for me, it is going back to that final, the thing we started with, the financial literacy. You need to understand your numbers, and they can tell a very interesting story depending on the perspective that you look at them. So I would encourage it, and if it's not through IAM, through whomever and a lot of folks don't have that, that CFO kind of guy, that person that has that financial literacy to be able to educate an owner. But you can educate yourself, and you don't have to know every aspect of finance. You don't need to, know how to read a balance sheet, et cetera, et cetera. But there are some very specific numbers and ratios that you can look at that tell a huge story about your organization. And then dig into those numbers on a regular basis. If you're not looking at your numbers at least monthly, you're doing yourself a disservice, that waiting till the end of the year and I hope these look good, kind of thing. It's just not going to work that way. If you hope to run a business successfully, you got to look inside the numbers.
I love you, Chuck. Thank you. Yes, numbers. I would sum it up with three things for quick. Know your business better than anybody else. And I think we have covered a blanket of all the different things of what that looks like. But challenge yourself and your organization. Know your business better than anybody else. The second part of that, and this is where it comes into the talent, know your people better than anybody else, because your people are your company, and people first, profit will follow. Too many times, I think we look at it the other way around and we wonder why we're not successful along those lines. And then you get to that third piece that I would go in is stay curious. I think the moment we think we know everything, is probably the time to give it up, honestly, along those lines. We probably do more telling than asking in leadership roles because that's how we've always had to move the needle. But when we start to get into the new consumer, when we start getting into what the new talent looks like, we need to stay curious and lead by the questions we ask, because the problems we're solving today are not the problems of yesterday. They're brand new. And it's going to take a lot more buy-in and a lot more groupthink to figure out the fastest solution than it is always just living in a legacy of what success was. We have to determine what success is going forward.
Great point. I mean, I think that means, you know, find partners that you can ask questions of, like a Supermove, like an IAM. If you have that tunnel vision, you're not going to understand what's outside that little focus area there. So don't be afraid to ask questions. And I would say, I've done enough of this in my life. Don't be afraid to fail. Don't be afraid to try something a little new. And if you fail, you'll learn from it, but you'd be surprised at the successes that you'll have.
Awesome. Well, I know we're out of time, so thanks, folks, so much. Thanks for joining us. Thanks, Beau, Charles, Wonjun. Thank you, guys. Lots of great information here. We will be sending out a recap because I know it's a lot to digest. So we'll send out a recap in the next week or so. But thank you, folks, so much. Again, there's a couple of helpful links in the chat. And yeah, have a great rest of your day.
Thank you.
Take care, folks.
Thanks for having us. All righty. Bye.